I mean, what's happened is business confidence is now back in recessionary territory. A lot of the interest rate effect is still to feed through. So if we come off with stagnation rather than a mild recession over the next year, we'll be doing well, I think.
I guess these revisions, though, will have a bearing on the forecasts that the OBR prepare for the autumn statement.
They'll have some bearing on that. But again, I think rear view mirror is the key message here. In terms of does it boost your estimate of trend growth going forward? Not clear it does. So, and that's really what counts in terms of how much you're going to have to raise taxes or not going forward.
Well, quite so. I mean, if one looks at the latest PMI data, I mean, the PMI data is kind of consistent with a modest contraction this quarter. Is that your assessment?
You have to be slightly careful with the PMI numbers, just because, if you remember, at the end of last year, they all dived into recessionary territory. Everyone, including the Bank of England, decided we're going to have a recession. It didn't happen. So I think it definitely means stagnation is the best we can hope for. But does it actually mean we're going to see a significant recession? I'm not convinced. OK,
well, let's switch to the Eurozone. Obviously, very, very encouraging inflation data from there today. Does this kill the prospect of further rate rises from the ECB?
I think it probably does. I mean, even before these numbers, to be honest, there was a risk rates would go up further, but probably they won't. But what I don't think it does is mean we're going to be looking at rate cuts anytime soon. I mean, it's a clear message, both from the ECB, the Fed and the BOE. We're not going to be cutting rates anytime soon. And sure, at the moment, it looks like they won't have to raise rates again, but you can't rule it out.
Clearly, Germany is already in recession. Is it your base case that the Eurozone is going to follow it into recession?
I think you're probably looking at a mild recession, as you'd probably be, in the UK, but it's going to be pretty token. And you've got this slightly stupid definition of, if you get 2 consecutive quarters of negative GDP, then you're, hey, presto, you're in a recession. But obviously, the data gets revised in 1 year's time. So what you think may be a recession now, in a year's time, actually maybe we won't.
Why do you think the Federal Reserve has been able to engineer a soft landing, having raised interest rates more aggressively than either the ECB or the Bank of England, and yet in the Eurozone and in the UK, we are potentially looking at a mild recession?
Well, that is one of the big question marks. And to be honest, the Fed, I think it's as surprised as anyone else at how resilient the US is. I think one of the reasons is that in terms of sensitivity to interest rates, the way mortgages are set up in the States, they're much less sensitive than over here. And also in terms of they've run down a lot more of their excessive pandemic-related savings. So the consumer's been pretty well supported. But, having said all of that, are we out of the woods? Are we sure we're not going to see a recession in the coming year in the States? Again, it's still very much an open question.
You made a really interesting point there. The US has run down more of its pandemic savings than we have here. Does that potentially come to the rescue of the UK economy if consumers have still got some ammo in the locker, as it were?
I think that will definitely help some of the squeeze you're going to continue to get from the rise in mortgage rates, which, because everyone's, half the population's on a fixed-rate mortgage, that will continue over the next year or so. So definitely provide some support. Does it mean we're not going to see a token type decline in GDP? Possibly not.
Right, Rupert, got to leave it there. Great to see you this morning. Thank you. Some other business news stories for you now. The water company Severn Trent is raising £1 billion from shareholders to help fund a clean-up of rivers and to tackle sewage spills more effectively. Half of the money is going to be coming from the Qatar Investment Authority, which is currently Severn Trent's third largest shareholder with a 4.6% stake. Retail investors are expected to contribute up to £7 million. Well, the news came as Severn Trent announced plans to invest £12.9 billion during the next regulatory period, which runs from April 2025 to March 2030. Severn Trent expects the investment plans to create up to 7,000 jobs. Canadian billionaire businessman Lawrence Stroll has raised his stake in the luxury car maker Aston Martin Lagonda from 22.96% to 26.23%. Mr Stroll said the additional investment demonstrated his Utri consortium's continuing confidence and belief in the future of Aston Martin. Well, Utri was already Aston Martin's largest shareholder, followed by Saudi Arabia's public investment fund and the Chinese car maker Geely. Aston Martin shares are currently ahead by 10% on that news. And the Scotch whisky distiller William Grant & Sons this morning reported its best results since before the pandemic. The family-owned company, whose brands include the UK's best-selling single malt Scotch, Glenfiddich, made a profit after tax of £331.3 million for 2022. That was up 34% on 2021 and the best performance since 2019. Well, the company, whose other brands include the Balvenie, highlighted sales of its Glenfiddich Time Reimagined collection of 50, 40 and 30-year-old whiskies. Now, the Dutch company Philips was once one of the world's biggest consumer electronics companies, launching the world's first cassette player and the world's first video recorder. More recently, though, it has focused on healthcare technology. It's now one of the world's largest suppliers of MRI and CT scanners, patient monitoring equipment and defibrillators. But 2 years ago, it was rocked by a big recall of its machines used for sleep apnea therapy. Well, Roy Jacobs was appointed chief executive a year ago to steady the ship. I spoke to him a little earlier and began by asking him what financial impact that product recall had had on the business.
The first priority was the patient, so we are very happy that now the sleep side, 99%, is remediated, so patients have new devices, because we were very sorry for the patients. So that was the first priority. Secondly, then, is indeed about the liabilities. We just actually had one settlement we did on the economic loss, so that actually is also behind us now. That still leaves the personal injury cases out there. That's in process. We have to come back to that in 2024, as I said earlier. It remains a big part of the focus, but actually the majority of the other business are also important to see how we can get the total company back and the other services to the other millions of patients and consumers we serve, where there are exciting innovations.
Now, obviously, the company has refocused from consumer electronics towards healthcare technology. For people who may not be as up on the details of why this was done, explain what the thinking was here.
The thinking was, ultimately, as a technology innovation company, you need to choose where you want to apply your technology insights and your innovation power. And the healthcare segment is a segment which has a strong underlying growth, where many patients will actually need to be served, but also has real challenges in doing it in an efficient manner and actually being able to serve all these patients. That's where there's a huge opportunity, but also contribution to be made in technology and innovation that should be applied in healthcare. That's why we opted to bring it together. The second piece is also we see that healthcare should be applied in the home and in the hospital. So actually having footing in the consumer side, but also having been in healthcare already for 100 years, but with one part of our business, bringing that together gives us a very good position to actually also bring care to the home.
Which are the fields of technology where you're seeing most demand right now?
So currently, if you look at what are significant demands, so monitoring has gotten significant attention. That, of course, was boosted by COVID, where people saw it's really important that you know the state of people so that you can treat them early or you can bring them in early. So monitoring is still a big theme, where you pick up vitals. That's also where we apply AI, for example, to predict events to happen. So when you're at the monitoring bedside, you actually have an algorithm that is watching over not only the vital signs as they happen in the moment, but they look over a 24 projection window if, for example, cardiac arrest could happen, or if you have a stroke that could happen. So that's very important in terms of the monitoring side. Then what we see, there's a lot of demand to get to faster and more productive treatment of patients in hospital. So when you need to get to a diagnosis, how can you do that faster? So when people need to get an image taken, we have, for example, a magnetic resonance solution where we applied an AI that can actually speed up the time by 3 times. So actually we can be more productive in the hospital, we can scan the patient faster because this is not a nice experience, and actually you can do it with an output that is more precise. And then the last area which we see is that we are also looking at how can you treat patients with less impact for them. And give you an example, if you have a serious cardiac problem, you need to have an open heart surgery in the past, we can now apply minimally invasive therapy intervention, where normally it would take 6 weeks in a hospital after such an intervention. Now we can treat you in a day and you get home the other day. So those are areas that we are looking at, how you can really apply technology to do interventions faster, less impactful for patients, and with better outcomes for the healthcare industry.
This greater focus on predictive technology, does this mean that Philips is going to evolve over time from being a hardware specialist to a software specialist?
Already happened. More than half of our engineers and innovations are software. Actually, we have a unique set of enterprise informatics solutions that we are offering to the healthcare sector. For example, if you need a monitoring platform, a big part of that is actually software that actually picks up all the patient data, the vital signs, interprets the data, and then transmit it to the nurse to have the proper reading, or to the doctor to kind of inform him about what treatment he needs to do. The same what I just said in terms of some of the diagnosis areas. You see the faster evolution now is actually through applying software on those specific areas. We're looking now with generative AI, how you also can take certain routine tasks out of the process. Because we know, and for example in the UK, huge shortage of nurses. nurses on average spend 15 to 20 minutes an hour on writing reports. How can you actually automate writing reports? And that's actually where generative AI comes in. They can pre-populate a report, the nurse can look into it, sign it off, only spend a few minutes, and actually spend majority of the hour on the patient, where they want to spend their time. And actually then you also need less of them because you can take the administrative part out of the way. The radiologist that currently is really also very much stressed for time, and we have imaging wait lines because people cannot take the image taken fast enough. We can help them as well with pre-selection of the scans that they take, where the AI actually looks at what they already identify. And then the radiologist can do the final sign-off and the control so that actually he makes sure and she makes sure that actually the appropriate conclusion is drawn. But actually a lot of pre-work is done with the AI that is applied.
That was Roy Jacobs, the Philips chief executive, speaking to me a little earlier. Fascinating company. A bit of breaking news to bring you. You'll recall earlier on that we brought you news of a coach crash on the M53 in the northwest of England, where Alderhay Hospital has now declared it a major incident. It's put out a statement. It says, following the incident on the M53, we have called a major incident. Our emergency department is currently extremely busy, and we would also ask parents to bring only their children to the department if it's urgent. Check your child's symptoms before attending our emergency department by using our symptom checker. All other appointments and services are running as normal. Well, last night's positive session on Wall Street was followed by a largely positive one in the Asia-Pacific region overnight. But the downturn was felt in the Nikkei in Tokyo. That finished lower to complete its worst 3 months since the second quarter of last year. Well, in Europe, stocks are all going into the weekend on a positive note, but are all still in line for a quarterly loss. Talking points this morning on mainland Europe include Adidas. The shares are ahead by 6% in Frankfurt after its rival Nike delivered forecast-beating numbers last night. Well, here in London, the FTSE 100 is also in positive territory, currently up nearly 0.9% in a broad-based rally led by property and consumer stocks. The leading blue-chip gainers in percentage terms are JD Sports and Ocado, which goes up and down like a fiddler's elbow, it must be said. Outside the FTSE, the publisher Future is up some 22%. That's following a trading update which has been well received, while Essential, which you can see on the screen right now, up 4.5%. That's after my colleague Mark Kleinman last night reported that it's in talks to sell its consumer data division. On the foreign exchange markets, the pound's rally against the dollar has extended into a second day. Sterling up 0.5% right now against the greenback, unchanged against the euro. The single currency also up nearly 0.5% against the dollar. As for the oil price, well, that has risen by almost 30% this quarter. Gave a little bit of ground this morning, but it's now firmly in positive territory. A barrel of Brent crude will currently set you back $96.02 a barrel. That's up 0.4% on the session. Well, joining me now is Sophie Lund Yates. She's lead equity analyst at Hargreaves Lansdown. Sophie, great to see you this morning. Let's start with Severn Trent. This is quite a major fundraising move by the company.
Hi, good morning. Yes, absolutely huge figures. You know, we know that they are looking to spend very close to £13 billion, you know, in the 5 years to 2030. And a big portion of this is going towards fixing leakages and also quite literally cleaning up its act and trying to stop those spillages from the storm overflows. And £1 billion of this is coming from, it's kind of tipping its hat to investors. And as you were referencing earlier, a small portion of that is coming from retail investors. But the overall picture here is that there's a huge level of investment going into this. And really the way that I'm looking at this, we know that the utility companies in aggregate, you know, they carry a great deal of debt largely. And really what this is going to mean for the balance sheet moving forward, you know, a big appeal of this sector is their ability to return cash to shareholders. And I'm not saying that's under threat, but it's certainly something that's going to be under the microscope a little bit moving forwards.
Sophie, on that basis, would you expect the other listed water companies, the likes of Pennon Group and United Utilities, also to be coming up with rights issues?
Potentially, I certainly can't be ruling that out. You know, Severn Trent's kind of been the first out of the gate with this, but it's certainly not an isolated problem. And I do think that there is largely now an expectation that some money is going to need to be raised from somewhere for others to fix this problem. As I say, it's not an isolated problem, and it's a big and very expensive problem. And that money to fix it is going to need to come from somewhere.
Well, elsewhere today, we've had a trading update from Future. Huge snapback in the shares. I guess there must have been a lot of short interest in this one going into this update.
Yes, for such a short trading update, the share price move has been absolutely huge. Last time I looked just before coming on air, it was up about 23%. And essentially what they've said is that trading, or at least operating profits, are going to be in line with the board's expectations. And actually what we're seeing this bounce today is more of a sigh of relief than it is an indication of brilliant things to come. Future, of course, owns a lot of media names from Marie Claire to Money Week and a whole host of others. But actually, what I would say is there are still a lot of challenges. It's spoken about the macroeconomic uncertainty and what that means for digital advertising revenue, which it relies on a lot. So there is still a great deal of challenges ahead. And also, when we look at this from kind of a year-to-date side of things, the shares are still down 34% since January. So positive momentum, absolutely, today, but there's still a lot of work to be done.
Before I let you go, Sophie, we've had some fairly benign figures from the Eurozone today on inflation. It probably kills the chances of another ECB rate hike. When does that start to reflect in European stocks?
Yeah, absolutely. So, going into this today, I kind of was going into it with bated breath, wondering what the markets were going to do. And, we've seen that, broadly speaking, the European market is pretty flat. Really over the last week or so, year to date, looking at about 5%-ish, which isn't too bad. And really, as much as there's been positive momentum, inflation's moving in the right directions. There's still a lot of work to be done, particularly around the consumer landscape. It's incredibly uncertain still, so a great deal to monitor. And unfortunately, as you're hinting out there, I don't think we're in a situation where we're going to be seeing supercharged stocks for the supercharged growth for the consumer discretionary industry in particular, of which we know Europe is relatively exposed to.
OK, Sophie, got to leave it there. Good to see you as ever. Thanks very much indeed. Still to come here on Business Live, why the NFL's upcoming games in London look set to be among this year's big ticket events. Stay tuned.
There's always more to the news than a headline. We want to discover, to delve a little deeper, to find out what's really going on. Explanation, analysis, the people at the heart of every story. I'm Neil Patterson, and this is the Sky News Daily Podcast. Alex Crawford joining us now from Ukraine.
Their personal possessions are all scattered around the place.
Our economics and data editor, Ed Conway, try and make sense of the big numbers for us.
Things can change incredibly quickly, and that's what they have done.
So, by the end, we'll hopefully all understand what's going on in the world just that little better. Available wherever you get your podcasts.
I'm Inzamam Rashid and I'm Sky's North of England correspondent, telling stories from this culturally rich region I call home.
I just took a shower above the clouds. You know why? Because this is the Emirates A 380. It's like Emirates, it's like better.
Welcome back. Now, on Sunday, the NFL kicks off this season's London games with Atlanta Falcons taking on the Jacksonville Jaguars at Wembley. But this will be the first time that British fans make up the majority of the crowd. So does that mean the NFL has truly cracked the UK? Well, joining me now is Chris Miller. He's the Global Managing Director of the ticket resale company Viagogo. Chris, good to see you today.
Thanks for having me.
I mean, there's always a lot of Americans that come over for these events. Are you surprised that the domestic fans will be in the majority this year?
Yeah, no, it's interesting. I lived here in 2007, saw the first time that the game was here, and it was mainly Americans. But this is the first time that we've seen over 2/3 of all of our ticket sales have actually been for British fans. So the NFL has done a really nice job of exporting the game.
It's not the case that American fans, it's too expensive for them to travel over.
Absolutely
not with the strength of the dollar.
Yeah, no, the NFL has done a really an amazing job. I mean, they've got the games in Germany now, they've got games in Mexico, so they're really doing a lot to try to export it.
And of course, all this really points to the sort of strength of the recovery in live events, sport, music since the pandemic.
Oh, incredible. Yeah, we've seen unbelievable demand all over the world. Here in the UK, we're up a significant amount, and also seen a lot of tourism. About 40% of all of our sales, people traveling to other countries.
40%?
40%.
Wow. So what other examples would you cite there?
So you see tourism, for concerts such as big touring acts like Taylor Swift, Beyonce, Coldplay has done a really amazing job all over the world, but also sporting events. So Ashes here, in fact, was 44 different countries showed up to go to the match, to the test match. Yeah, pretty amazing.
44?
Yeah, even Americans, as a matter of fact.
Wow.
Yeah.
For a series between England and Australia?
Yeah, it's pretty incredible. So things that you wouldn't normally see, but being a global ticket marketplace, we get to see the whole thing.
That's right. I mean, what do you put that down to?
I think people are ultimately putting a lot of value in these experiences, much more so than they were before. I mean, the pandemic obviously kept people separate, but those experiences, being in that stadium, that joy, it's like once in a lifetime.
And when obviously there was a lot of enforced savings built up, as we were discussing earlier in the programme during the pandemic, is that feeding through to ticket price inflation?
We haven't seen too much of the pricing going up. We've just seen an enormous amount of demand. So what we see is a lot more ticket sales, a lot more people using the service. We've got about 50 million tickets on the website at any given time. So pretty incredible.
Do you think this is a permanent shift, though, towards experiences and away from stuff?
We'd like to think so. We really see a lot more improvement in the demand all over the world. So it's not just about what we see here in the UK, but people traveling from Asia here to the UK, United States. So hopefully this is going to be a trend that continues for us.
And what proportion of primary tickets find their way onto the secondary market?
It's depending on the market itself, and the considerable amount in the United States, you see a lot more of trading taking place than you do here in the UK. But we probably estimate about 1 every 5 tickets will be resold.
1 in 5. Does that vary much, whether it's sport or whether it's music?
It depends. It just depends on the demand of the event. It depends on where it's going to be. I mean, there's a lot of different factors that can play into that.
How do you stop the scammers from getting too big a grip on this secondary market?
So the resale service that we provide is all about security. It's all about safety for the fans. I mean, it's ultimately about ensuring that a buyer that purchases a ticket gets what they are ultimately ordered and into the event. That's exactly what the service was set up to do.
But what about these so-called scalpers that buy up tickets in big quantities and then resell them?
Yeah, so we don't see that. We see a really wide distribution of sellers on our website. In fact, the overwhelming majority of sellers only sell once or twice a year. So really about, for us, is ultimately the operations and the fulfillment. We basically hold money in escrow until after the event. We don't pay the sellers until after the event, and ensuring that the buyer gets in and got what they ordered.
So if you pick up on behaviour by a professional scalper trying to make a big markup, you can, what would you do there? Would you refuse to sort of give them a platform?
We're an open marketplace, so we allow the market to do what it does. And so there are professional resellers on the website, but ultimately it's about ensuring that their security and their safety. So we just want to make sure that there's people that do access the resale market, they have that optionality and that flexibility, and it's safe and secure.
So what's going to be the biggest event this year then, do you think?
Taylor Swift.
Taylor Swift.
Taylor Swift, yeah. No way around it.
And what sort of premiums are these tickets changing hands for?
It depends on the market, because there's a lot of, it's unclear. Sometimes the face value doesn't really exist anymore. There's a lot of dynamic pricing and packages and things like that. But we're seeing really strong average ticket prices for Taylor Swift. So lots of demand for her.
Oh, well done, Taylor. Chris, great to see you today.
Thank you.
Thank you.
Appreciate it.
That's it from me. I'll be back this afternoon with our afternoon edition at 4:30. Hope very much to see you then. In the meantime, do stay tuned, because coming up after this short break with all the latest from the M53 coach accident, it will be Sam Washington. Hope to see you later on today. Thanks for joining me this morning. Cheerio.